Hey everybody, good evening. This video is just going to be a quick and short, simple video explaining the Form 1095A. The goal of this video is to hopefully help clarify a few things about this form with you guys so that you can relate this information onto our clients at Liberty Tax, help create some confidence and trust with them, and help them better understand what's going on with their tax return when they have one of these forms, and why why there's a repayment on some of the premium tax credit or an additional amount that they receive from it. So jumping right into it, so it doesn't take us too long tonight, we got column A here, and this is actually just in our Phoenix. This isn't the actual 1095A, but it does have these three columns. So column A is our monthly premium amount. This is the amount that the insurance company is billing you for your plan. So let's say this was your 1095A, this is your monthly premium for your health insurance. This is what the insurance company, whether it's Select Health, whether it's Montana Health Co-op, any of the ones that are on the marketplace, this is what they bill out. Column B is the monthly premium amount of second lowest cost silver plan. There are several different plans when you're jumping onto the marketplace to get your insurance at the beginning of the year. You got your bronze, your silver, and gold plans. They go from bronze being the lowest cost of premiums up to the highest being gold plans. The only difference between any of all of those is the maximum out of pocket. The gold plans are obviously, better for lower deductibles, lower maximum out of pocket, things like that. So this one honestly doesn't even matter. This one doesn't affect the tax return at all. It's just for reporting purposes only to the IRS. Column C, however, is the monthly advance payment of premium tax credit. It's called that because it is an advance of the premium tax credit. At the end of the year is when on the tax return it does the calculation, figures out how much premium tax credit you should have got in the last year, and then you either pay some back or you get some, back depending on your income level and how much credit you should have had, and this is the credit you actually received for the year. So the difference between A and C is what really matters. So when you're explaining to a client, say, hey, this is what your premiums cost throughout the year. A, if you go down to the bottom, you got your annual total. That's what really matters. Say, hey, your health insurance actually costs this amount of dollars from the insurance company. Column C, this is actually what you received for assistance from the government this year for your health insurance premiums. And then if they have to pay some back, you can help explain, hey, you had, like on this one, where I put in a few of the numbers just for an example, you had 500 payments for your premiums for every month, and they were also receiving 500 on the advance of the premium tax credit. So they weren't paying anything out of pocket throughout the whole year. So let's say at the end of the year, we fill this out, they got their money, they made 50,000 bucks. They said at the beginning of the year they were only going to make $30,000, so they had to pay back a couple grand in health insurance premiums. Well, during the whole year, 5 times 12 was 6,000 bucks. They only pay back 2,000. So in honesty, they really only paid $2,000 of health insurance premiums throughout the whole year, when it really should have cost them $6,000. But they got a bunch of assistance from the government regardless. They just had to pay some back because they got too much. Now, if they made less than what they reported at the beginning of the year, of course they'd get some back. So it's just kind of nice to kind of help explain clients. So we got to know ourselves first what these columns are, what they mean. So A and C, those are the important ones. A is the cost of the premiums that the insurance company is billing you. C is the amount the government is help supplementing your payment of your premiums. So at the end of the year, you either have to pay, most people usually end up paying some back, just because they always estimate low because they don't like paying out throughout the year. So this will just help if we can explain that to clients that, hey, even though you're paying 1,500 bucks back, you really, if we didn't have the advanced premium tax credit, you'd be paying $6,000 a year, and really, in all honesty, it's only costing you $1,500 for great insurance. So that's it for this little short video. I hope that helps out. If anybody has additional questions, just message me on Slack and we can get together and help clarify some of those. Hopefully in the future, I'm going to hopefully do a couple more videos, hopefully one on the educational credits and how to properly claim those and how to get the maximum benefit for students, because I know there's a lot of confusion with that. And then maybe I'll do some on the other dependent credit, because even in my CPA firm, there are some people confused about that and had been doing tax returns a little incorrectly all tax season. So I hope this helps, and have a great evening.